Alright guys, so we spoke last video about the rules, and then the video before that just overall a Wyckoff overview. So now we get to speak about actual schematics. Like, I'm not going to really speak on this here price cycle too much, just because it's not really, like, if you read through it, it's very self-explanatory. Like, I don't really need to speak on it. And also, when you're going by price cycle, you're therefore generally saying that price is going to go down, up, back down, and then when it's back down, it's going to go back up again, back down, back up. So it's like, it's very like misleading, I guess, to an extent. So I just don't really use it. It doesn't really matter to me. So the laws are obviously important. That's probably one of the main things I want you to look for before you even analyze schematics. But now we get to actually speak on, schematics. So essentially, Schem 1, accumulation, this is basically the conversion of supply to demand, right? And distribution is the transition of demand to supply through structure, aka the range, and through volume shifts. And we're going to be going over both. So when you're analyzing a schematic in real time, it's not really about getting every single abbreviation in. It's more so understanding the logic, which is why I tell you to look at the rules, and more so interpreting what's going on inside a range to then determine which direction price will go next, right? And something to note for any schematic, whether it's accumulation, distribution, reaccumulation, redistribution, you have to realize that a schematic is not valid until it is completed, right? So it doesn't matter if it's here phase D and you see it pulling back, but then it dies. That means the schematic failed because it never completed. It has to complete phase D to be considered completed. If not, then it's not a real schematic. And it'll also follow different rules, etc., etc. So you don't really need to know what each little abbreviation is, right? Preliminary support, selling climax, automatic rally. You don't really need to know all that stuff, but it's good to know. But you more so just want to interpret what's happening inside the candles inside the range through the candles, which is why we first go over inefficiencies and SCs and all that, because I want you to be able to not only interpret what's going on in range, but how to actually analyze what's going on in terms of order flow and just trying to figure out where price to go next. Right, so I have 3 examples for this video, and example number 1 is Euro USD. I said I would speak on this in one of the previous videos, so here it is. This is the entire schematic. Let me see if I can zoom in a little bit more. All right, that's fine. So here we see phase A, B, C, D, and E, and what's going on in between them. So first off, right, usually, right, this is something I've noticed in accumulation schematics, not really in any other type of accumulation. So this is obviously a Schem 1 due to it being a spring, right? So first we see our drop, and that is our selling climax. And also notice this is where our bearish volume peaks, right? Notice it doesn't come back this high until post spring, etc., etc., etc. So notice here, right, we see our selling climax, automatic rally, right? And then you see price start to basically struggle to go lower, right? This is that showing that first sign of weakness, in my opinion, right? And then notice that our selling climax is then taken out by our secondary test, right? So the secondary test is meant to take out our selling climax, which is your quote-unquote second drive. I don't believe in that drive stuff. I think it's BS. But so you see our secondary test take out our selling climax, but notice price is coming down below previous pricing, and notice that the volume is slowly diminishing here, right? Whereas then we get a reaction, right? Take out previous liquidity up here, probably filling inefficiency somewhere here. And then after that, you see the spring happening, right? And notice that the volume, right, is relatively high in comparison to what it took to bring it down, but that's more so because that selling pressure is meant to take out previous liquidity, and that's all the spring is. It's meant to take out previous liquidity. So obviously, you could have. There's a possibility that you can sometimes get M1 entries here, very small time frame entries, but it's you're more so trying to guess that low, because you're gonna see in redistribution why I say you're guessing the low. But as you can see, the volume here is slowly diminishing and it's starting to shift here. What I mean by shift is like it's starting to convert based on the fact that we're struggling to go lower. So if we can't go lower and volume is essentially diverging in comparison to momentum, then you're seeing an instability be created. And as you can see, after the spring, right, we take out previous high, which is considered an intraday break of structure. So now we broke a high for the first time in this visible range, right? Besides here, so that's first inclining me on. We're probably gonna see some sort of trend shift soon. We need to start getting prepared for that. And then as you can see, the test did not break a previous spring, considering this a new higher low, right? So you have a higher high here and a higher low. So now we test the high once again, right? But notice that the bullish volume is slowly increasing again, right? And once you see that price is essentially creating equal highs here, meaning there's new liquidity, and we're consistently making higher lows here, then now we know that this is our last point of supply, right? Last point of supply. And after that, volume takes over, and that's when you see that big impulse to the upside, considered the essential break of structure, and that is now your sign of strength, which is now you're in phase D, right? So now we know this is a potentially almost basically completed accumulation scam 1. So now any pullback is your entry, right? So as you can see, there's this wick here, and I discussed this in a previous video on how this was an entry. I believe it was the video where we connected like everything, like all the concepts together. And so that's your entry, right? You then create a higher low, target hit at previous high, excuse me. And then that's when you start seeing higher highs, higher lows, higher highs, higher lows. And so then price continued, right? And something to notice here is your equilibrium of range, right? And that is the midpoint of the range, and just it's not really the deciding factor, but it's good to notice what happens in price equilibrium. It varies for every schematic, but like however here it wasn't really that significant. So but still, I personally believe it's a very key point in price. And how do you find that equilibrium? Is you take the ascending rally and the spring, right? So you can't find the actual equilibrium until post phase C, right? So just remember that. This one's a bit off, as you can see, but it's not really off, it's just that the trend line here is off, but it's actually at the same point. So this is the correct equilibrium, right? So this is a M30, right? Intraday accumulation schematic 1. Now we're going to look at a schematic 2. And the schematic 2 is literally just a schematic 1 with no spring, right? So this one's actually from a minute 1 time frame, right? So what do we see? We see selling pressure coming in, right? We see our selling climax here. Essentially, our secondary test is here, right? But I didn't include it just because it would look too messy. So it doesn't really matter. Not every little abbreviation has to follow to the T. And I'm going to show you like basically some adaptations, probably in the next video. So here, what do we see? Selling climax. And as you can see, it's also the peak in volume, right? We then create our automatic rally, secondary test, right? That takes out that selling liquidity. That selling climax liquidity. And notice that price is continuing lower, but volume is diminishing. That's showing the instability that I keep telling you guys about. So now in phase C, we're either gonna get a spring, or we're gonna hold that previous secondary test and then continue, right? So you can't really you won't really know what the low is until post phase C, phase D, right? So here we see that it doesn't create the spring, price holds, right? But volume is still diminishing, right? So creating that instability, which causes reaction to the upside. We therefore take out the previous AR, right? So now we took out buy liquidity. Now all we do now is come back for any potential previous orders that we cannot see on this time frame, right? So it would be helpful to have those 30-second, 15-second time frames, but it's not really the end of the world if you don't have them. But now after the LPS, we get a full-on reaction, and that's your break of structure, right? So now any real pullback is your entry, which is over here. But something to notice here is notice the two LPSs create consecutive higher lows that then creates a higher high. So that's a break of structure, and now we know that we're shifting to the upside because we're completing our schematic, right? So as you can see, after the BOS, yes, your sign of strength is the actual BOS, right? Then you create your last LPS, and then that's when you see price fully start to reverse and fully convert, right? So the main thing here to understand is just notice that instability. The instability is probably the key word that I'm going to use with Wyckoff, because due to volume decreasing substantially and price creating lower lows, it just doesn't make sense, right? So that's that instability that I'm talking about. So this is an M1 schematic 2, and then our last example is another schematic 2, and this is actually on the monthly time frame, which is gold. So as you can see, preliminary supply, basically the peak of volume, right? Okay, there's selling climax, secondary test, right? Automatic rally, but then we see volume diminishing, but we're creating a lower low, right? Like once again, instability, right? So soon after that, we see a test of the automatic rally, right? Then after that, we create an LPS, which is now considered a higher low, right? We then test that previous structure, right? Now this is now considered equal highs, and we come back for the LPS number 2, since it's schematic 2, and now we get that reaction to the upside. But now we know, even if we're right here, we know that we have a higher low and a higher low, right? So 2 consecutive higher lows, and we're probably going to see this liquidity be taken out, especially if it follows our schematic. So I forgot to differentiate these by phase, but oh well, it is what it is. So now ideally what's happening here is if we cannot create more momentum to the downside, we're going to go upside, and that's exactly what you see here, right? Liquidity is now taken. We now have the full-on break of structure, and now this is bullish probably forever because this is the monthly time frame, right? So notice here, right, diminishment of volume, shift, right? We see stagnant volume, but the structure is telling us, that we're seeing a trend shift. And now look at the bullish volume essentially ascend here, and that's what's creating that momentum to the upside, right? So that basically just covers accumulation. All you really should understand is pay attention to the structure, pay attention to the volume, right? And then make your judgments off of that. You don't have to catch the secondary test in a Schem 2. You don't have to catch the spring in a schematic 1. What matters is that you're understanding that, right, the direction is switching, right? And then from there, that's how you develop a bias. Like this, my Euro USD swing, that was 700 pips. I got this entry here, I believe. I didn't get the bottom entries. I did have them, but I closed them early. But this was my main entry here, right? I didn't catch the bottom, but I understood that we shifted in momentum. So now any pullback was my entry, right? So just understand that, and Wyckoff can be a very something good for the arsenal, honestly. So yeah, guys, the next video is going to be distribution. So